Metals One listed on the stock exchange in July 2023. As it approaches its 1-year anniversary, I'm delighted to be joined by Director and Chief Executive Jonathan Owen. So, Jonathan, a lot has gone on in the past 12 months. You came to the market with the intention of advancing strategic metals projects in Finland and Norway, and you're celebrating 1 year with your Maiden JORC Inferred Mineral Resource at the Black Schist Project in Finland. What does it reveal, and is it above or below expectations?
Thank you, Sarah. Absolutely. 12 months, well, almost 12 months. So still within that 1 year, we've achieved a huge amount. So with the drilling in Q4 last year, and now, of course, this mineral resource estimate, the maiden resource estimate for our P5 target. So what does it mean to us? It's hugely significant. It's a milestone for the company in the sense that this now underpins our move into the development space. So you could have called us an exploration play earlier in the year. We're now definitely a development company, mining development company, front and centre. So this additional 29 million tonnes, we add that to our existing 28 million tonnes, and we've got something quite significant now in terms of a resource base upon which now to start moving through the stage gates towards development and production. So that's hence the significance of this moment.
So do you see yourself ultimately as a producer?
Production is a few years away. We have the skills, experience, the appetite to take it to the production. But frankly, if someone came along and gave us a great offer end of the year, next couple of years, whatever stage we're at, I'm sure we would consider it. And at the end of the day, whatever is best for the shareholders in terms of returns, we will look to release that value to them.
Okay, so that's real crystal ball gazing. But let's come back to now, because unusually you've decided to raise funds directly. You've cancelled the farm-in agreement with investment company Gunsin. Now, how hard a decision was that to make?
The decision to cancel it, to claw back the shareholding of the Black Schist Project was pretty easy. I think, as you've seen now with this resource estimate, we've got something quite substantial, and we've obviously always believed in that from the day we acquired the asset. So to remove Gunsin and to take 100% control was the aim of the game. To do it at 1p was very painful, but it was a question of when is the best time. We could have waited and waited, and been in a more difficult predicament. The structure of the Gunsin deal was based on 4 tranches of cash payments from Gunsin. We'd received one, and we would have expected to receive the next 3 over the coming quarters. And frankly, from an operational perspective, that makes it hugely challenging to plan work programs, to commit to drill contractors, etc. When you really only have certainty over a small amount of cash in the bank. So to go out to raise, that's given us a long runway now in terms of cash position. It'll take us through certainly through the PEA, the preliminary economic assessment, where we tend to commission shortly. So we're in a good place. Okay,
so let's talk about the market opportunity. I'm thinking about the prevalence of nickel that's coming in to the global supply chain from Indonesia. Isn't that competition?
It is competition. All suppliers of nickel are potential competition, but it comes with strings attached. Indonesian nickel is dirty nickel. It has extraordinarily high carbon footprint. If we look at our neighbour Terrafame, who is currently producing nickel in Finland, it is our exemplar, the model upon which we intend to build our own operations. They're producing very low carbon footprint nickel, 97% lower than Indonesian nickel. So that carries something. I mean, dirty nickel to sustain or to underpin a green transition seems a little ironic to me. So we're seeing EU legislation now pushing towards local sourcing of sustainable nickel. That's what we have to offer the market, and that's all great. And then in terms of the economic side, Indonesian nickel is not that cheap. They've admitted they can't produce it really for much less than $18,000 a ton, which is pretty much where the nickel price is today. Meanwhile, Terrafame, again, our exemplar, is producing nickel at a far lower cost of production. In fact, it's probably the lowest cost of production of nickel globally. So wherever the nickel market lands in terms of supply and demand and equilibrium points, Terrafame and ergo Metals One will be in the best position to continue supplying that market and generating free cash flow throughout that commodity cycle, however volatile it's going to be.
Jonathan, I want you to indulge me because I've got my geography head on. Let's stay at the other side of the world. We've covered Indonesia, but there's been the recent closure of BHP's nickel west mines in Western Australia. Does that open a window of opportunity for you?
Oh, it certainly does. It takes nickel supply off the table. It comes in the wake of a number of similar closures in Australia with First Quantum's Ravensthorpe, Wailu's Kambalda operations earlier in the year as well. So this removes supply from the market, which helps support the nickel price where it is today. And as you just mentioned, the Indonesian nickel market is sort of pinned around $18,000 a ton as well. So it all lends itself to our success. The nickel mines that closed in Australia, these people have to bear in mind that these are quite old mines. These are legacy mines, high cost mines in terms of operating costs. So these sit very much at the high end of the cost curve and would always be the first casualties as the nickel price enters that cost curve. We, or Terrafame, again, our model sits right at the other extreme of that cost curve. It's like I said, they are first quartile, lowest cost producers, and we'll fare very well through these times.
Okay, I want you to talk me through the shareholding register, because you've got AIM listed, peer Blue Jay Mining, soon to be known as 80 Mile. It's extended its lock-in of almost a third of the stock. How advantageous is this locking in? They own a huge chunk of shares, and I was wondering, does this make the stock illiquid?
It's the extension to the lock-in to December 2025 is significant for us in the sense that it underscores their commitment to us, their belief in the projects, and it also means that we don't have a what is effectively a junior AIM company potentially having to call that stock down at any point in the near future. In terms of the share registry, we have another similar amount tied up. Locked up with the vendors of our Norwegian project, the Rana project. So they're similarly locked up, which leaves a good percentage of the share register locked up. There's plenty of free float there to support active trading and good volumes at the moment.
When can investors expect that preliminary economic assessment that you referenced right at the beginning of our conversation?
Well, now that the resource estimate has been released, we can now go to tender for the work to independently calculate the preliminary economic assessment. So that'll be happening. That's happening now. We'll look to appoint a consultancy in the next few weeks and get that work kicked off. The aim is to have that completed before the end of the year. I'm aiming for November to have that work completed. It could roll into December, but certainly this in Q4. And the importance of the PEA, like I said at the beginning, this is a true milestone for the company, the resource estimate, because it underpins this PEA. What the PEA gives us are the economics for the project, the projected internal rate of return, NPV, the capex layout for the project, etc. And these are the hard numbers that we need then to go to the EU and put in our applications for the strategic project status, which is hugely important. That would give us then the access to EU-supported project fast-tracking and also EU-supported finance in the form of grants, access to the EU battery fund, the €500 million fund that's just been set up, etc., etc.
Okay, so this is a gift. My gift to you, Jonathan. In summary, why should shareholders put Metals One on their watch list?
So, as I've said, we're moving through the stage gate very quickly in terms of developing the the Black Schist assets. Don't forget, we've got the Rana project in Norway, JV with Kingsrose, which is similarly going through the stage case with those guys, very active on the ground exploring. But what we're looking to do is to move very quickly to a point where we've got strong economics for a project. We can convert that project, put it onto the balance sheets, move it out of the sort of exploration play category, and people will then be able to very clearly put an enterprise value to us. So at that point, we can truly compare ourselves with peers, with operating operations, and we should see a lot of share price growth between now and then as news becomes released. We've got environmental assessments to be kicked off shortly as well. So plenty of activity, all pointing to the direction of an economic asset.
Wonderful. Jonathan Owen, Chief Executive and Director of Metals One, thank you very much indeed.